Nvidia shares are down once again in the pre-market today. Investors cooling on the AI giant in the latter part of last week. This morning, you can see the stock off by about 1.8%. Still, month to date, the stock's up 13% and a much bigger run if you're looking year to date or the last 1 year. Joining us right now with his take on the stock of the moment is Wang. He is Constellation Research founder, chairman, and principal analyst. Hi, Ray.
Hey, good morning.
You've got a $200 price target, and you say there's an entire list of 7 reasons why you are convinced this stock is going to get there. Why don't you lay out the broad argument?
Well, Becky, there's 7 modes that are important on why the stock will hit 200. First is a visionary-led CEO, and that's very, very important. As you've seen in the Valley, those are the ones that have led, like the Larry Ellisons of the world, the Scott McNeelys, the Mark Zuckerbergs. The second one is the high barrier to entry. There's few competitors that can come into this chip market, and it takes a long time to get a chip to market. And if you can do that, and if you succeed, and then if you can actually get the right chip, that's a very, very hard thing to do. The third one is high switching costs. Once you're in, you're locked in because of the CUDA software. You know, the access to chips, the software, and the entire stack, you're going to be locked in for quite some time. And they've got quite a lead in terms of doing that. And of course, Nvidia's had dominant market share. And I think that makes a big difference because they've been in this market for quite some time. And the competitors are behind by 24 months. And then, of course, we're only seeing 1/10, maybe 1/100th of the product roadmap that Nvidia has out there. And that's really exciting for those who actually have some insight into what they have next, because it's more than just chips and it's more than just what's happening in software. That ability to go from silicon to all the way to the end side, that's where we're going to see a lot of the innovation. And of course, the ecosystem has made the GPU a default standard. It's the standard of everyone's looking to for AI, from inference and testing. And of course, the numbers don't lie. I mean, we're seeing some amazing growth here that actually matches the PE ratio. And that's what everyone's looking at. They're trying to figure out how this is going to continue. But gross margins of 78%, 262% growth compared to a year ago. This is going to continue for at least the next 18 to 24 months.
So how do you describe the pullback over the last week?
Oh, the pullback is coming at a macro level. People are worried about the consumer side. People are worried about where the economy is going to head, and they're doing some profit taking before the summer. So I think it's a good time to buy the dip.
Ray, there are some people who look at this and say, okay, this is the equivalent of what we saw with Cisco back when the internet phenomenon was taking off in the late 1990s. How is this different?
I think this is different because when we were looking at Cisco, when we were looking at where Intel was and where Microsoft was, that era was really built on those 3 companies. I think Nvidia has learned from those lessons and realized that they have to go much broader than just being a separate company building just chips. What Nvidia has done has built partnerships that are going to last the next era. And so in the age of AI, we actually believe AI begins and ends with Nvidia because they've actually built out a roadmap that is much more encompassing than where networking was or where software was. They actually see that end-to-end vision. And that's one of the interesting things with what we see with Jensen's overall vision.
Today, the stock's at 124. Your price target, $200, is the next 12 months?
It's the next 12 months, correct.